So we're going to talk about Bybit 2020, the new coins coming, and a little tutorial on how to use it effectively. So hi everyone, welcome to the channel. If you are new, please do subscribe, hit the bell button, like and comment. I want to talk about my favourite trading platform, one that I've been rating and raving about for the last 18 months. You've probably noticed. Anyways, now there's some new coins coming to the Tether side of it. So you got Ethereum, Link, LITECOIN and Tezos. I've known about this for a while. I've just been kind of sworn to secrecy, not supposed to say anything. But seeing as Ben has now put it onto his Twitter feed, I can talk about it in a bit more detail. So I want to go over the new layout of Bybit, ultimately how to use its stop losses, and I want to explain a good method for you guys to trade and simply be at one with the market in your own method. But as well, if you are new to the world of crypto and you are like, oh my god, this is leverage trading, don't worry about it, because you do not have to use leverage. Honestly, you can go 1x, and there's going to be some strategic things in mind in this video to tell you what to do if you're panicking in terms of investing versus trading. Okay, so we're going to talk about it. So first things first, obviously these new pairs. Much better choice, much more variation, which is good. Obviously, trading in Tether is also a bit safer than using the underlying asset in some ways, because obviously volatility with Bitcoin, etc. One thing about the world of Bybit that I've always rated, and the reason why I often ignore other exchanges is because of the risk management. I've been vocal about Binance being dog shit due to the fact of their trading management and their risk management. It is shit, right? There was a time in Bybit in terms of like no one really knew about it, but everyone gravitated to it because of one, BitMEX, and B, Binance. BitMEX due to their horrible price action, which you always knew about anyways. It was a bit weird. And then you've got the world of Binance with the world of their risk management. It wasn't a thing. They never had stop losses. In reality, you had to basically put in your order, then put in a conditional limit order as a stop loss. What the fuck? Now it's all changed. Binance have kind of got on board a little bit more with the risk management, but they've made this even better on Bybit. They've put a 2.0 version of this with simplicity and confidence. Basically, you can do selected positions or your entire position on a stop loss. Makes it really easy for laddering out of a position. So overall, in my honest opinion, this is the dog's bollocks, right? For whole world of risk management, for the whole world of just everything at risk. And it also has the mutual insurance, which is kind of cool too. But in terms of how to use it, it is probably the most simple thing I've ever seen. And as I alluded to, exchanges message me all the time asking me to try their stuff. I realistically don't like majority of them because they don't have the same features as this. When you've got used to features like this, you just do not want to go away, especially the likes of stop loss, especially price action. It makes a big difference. So let's go over it in more detail. Let's talk about the platform, and then I'll go through some little methodology. And the one thing I want to say about trading, have a separate pot. Too many people are on Binance and they're like using their investment bags. They're trying to get really cocky and confident. Oh, there's a dip, I'm going to sell my bags and buy back low. Reality, majority of the time, people are just selling into supports. And you don't want to do that. Most important thing in the world is you buy at support. You don't just sell. You sell at resistance levels, at tops, at regions of interest. As you can see here, why do we zip down? I'll show you my analysis to show you why that was an important point. It's just a key level of resistance, a key zone in and around this region, and it is all in confluence between the Fibonacci, and I am a longer time frame trader. And reality wise is I've not been trading much this year. I don't need to, but ultimately when I do, it is the higher time frames for me throughout. So in terms of all this, we'll go over it in more detail. We'll talk about it, we'll see how it kind of looks and how it all works. In terms of everything, it is so simple. This is a nice little trading view chart, so you can obviously put your own little things on here. You can do whatever the hell you want with this. You can make it big if you so wish to. Obviously, that's going to ruin the screen in terms of this video due to the fact of the way my screen is huge. But fundamentals are simple. You can do whatever the hell you want. If you want to remove the volume, you can, okay? If you want to zoom out, you can. If you want to put your orders on here, you can. You can also put all kinds of other stuff on as well. You can also use high Fibonacci candles. You can also use line charts. You can use candles, any time frame. You can put pretty much any indicator on there as well. It is a simple chart, right? You can't really go wrong with that. Now, the one thing that people tend to worry more about than anything is obviously having it all fully set up and all the appearances. It's absolutely fine to do it as long as you are used to the world of TradingView. Now, in terms of all this, obviously you've got the order book, the order flow, and then you obviously got the most recent trades. Quite a bit of liquidity flying through this at the moment. You know, it is a very popular exchange nowadays. If you wanted to look at it in terms of depth, you can obviously use a depth perception chart if you so wish to. And the most important thing, how much equity you got in your account, and obviously what you want to trade as. Personally, I recommend for anyone isolated, don't use cross unless you have got A, huge bags, and B, you are good with risk and equity management. So in terms of us putting an order in, let's just go for a little random order, just to put one in, just to show you what it feels like and how it looks. If we're going to look at any sort of, you know, trade, as I said before, you can, if you so wish to, you can put 1x on here if you so wish to. You don't have to worry about too much. Obviously, liquidation price will be totally different at 1x versus 10x. You don't want to just go 10x because your favorite influencers go, oh, go 10x, you know, win, 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 you're going to go to the moon. Obviously, do your own analysis. So if we're going to do any sort of limit order, you can put whatever the hell you want in here, right? And it will do whatever the hell it wants in terms of this. So the reason why I'm saying this, we'll put in a random limit order at 11,000, and let's just say 10%, and we want to open a long at that position, right? What will happen here, it will just open a long. But before you do any of that, the one thing that you need to remember, go down to this level, just tick that box and go, if you want to go long, put a take profit or put a stop loss. The reason why I'm so, you know, happy to use Bybit, and I've always been happy to use it, is it's always had this preempted stop loss region where you know exactly what you've lost. So the one thing that I teach everyone, know what you're getting into. Simple as that. Make peace, make your bed, whatever you want to call it and describe it as, with the trade you're getting into. Too many people get into a trade, they don't know how much they're risking, they don't know how much money they've got on the table. When it goes into a red, they're like, oh my God, they absolutely kill themselves and they ruin it. If you're looking at that, it'll tell you exactly what the world is of a win. Obviously, this is only on 1x, so it's a bit different. But you can see here, 50%, boom, you win $16. And if you obviously, if it comes into a loss, you lose 3. Pretty simple. Pretty simple. So it tells you exactly what it wants to do. So if we're going to go open that long, it'll do it all for us. What will it do? If I scroll down, by the way, you'll see in the active orders, we have got one load of contracts open as a long, and it also has a take profit and stop loss. Simple as that. So that is you if you are laddering into an order, if you are laddering in. So if you're going into a zone, put a load of different orders in, happy days if you so wish to. Now let's go on to a live order. Let's put it live. Let's see what happens. What we're going to do, we're going to go to a market execution. So obviously we'll just order it as it would. What we're going to do basically, we're going to go as a nice little long, and we're only going to put a tiny amount in here just to kind of just show you how it kind of works. Realistically, we'll put a 3x leverage on here or whatever, something small, so you can kind of get the gist of it. We'll put a very, very small amount in, just so you can kind of see the picture. All I want to do is show you how it kind of works. So as I said before, obviously you can make peace at whatever you're losing, whatever you're going to win. Want to kind of make it so it's kind of obvious. Now obviously you do your own analysis. I'm only showing you here how the buttons work, how to put your orders in. Now the obvious point here is you can put whatever you want in here first, and then you can kind of, as I mentioned before, figure out what the losses are. If you are only risking say 2% of your account, you need to divide obviously and figure out what 2% of your account is. Figure that out with your own meanings, your own calculator. Then you can figure out, well, what is 2% of that? Well, you can figure that out quite easily, and then you know what you're going to lose here. So what we're going to do now, we're going to go and order into a random order. Let's just put one in. We're going to go to a different contract though. We're going to go to BTC USD. This is on a different version. This is on the Interverse version. The reason being, why not? Just kind of mix it up a little bit. So just to kind of clarify one thing, on the side here, this is the underlying asset. Onto this side, when the new ones come out, that'll be just Tether. Okay. Again, it looks very, very similar. It is pretty much the same thing. Don't worry too much about it. Now, the one thing about this, obviously isolated, what we want to do here, we want to go into a market long, for example, just a bit of a small long of a tiny little amount of BTC, just a little sliver, just to kind of do it. Why not on that certain level? Bear with me. We'll just put that much in. It says over long, again, we'll put like a small little stop loss in there, a small little TP, and what we're just going to do is going to go boom onto it. Doesn't really matter too much about it. We're going to lose 14% ROI and 50% on that one, obviously, amounts circumstances. So with all this, we are active in a live order right now. As you can see here, you got your stop loss. You take profit as well. How much is in a position which is very, very small on this one, just as an example. But the fundamental telling sign is obviously you've got a conditional order for your stop loss, and obviously you take profit is up there somewhere. There you go. You can drag and drop these if you so wish to, or certainly on the Interverse chart. Not so much on the Tether chart just yet. That will happen though over time. But the one thing that is obvious, trade management is obviously key here. You know, you can easily just shut down your position very, very quickly by using the close by limit or close by market order. But just to run through this again, it is super, super simple to do it. And again, all you need to do is, obviously, if you go into a limit order, if you so wish to, you can do it from current price or just a little bit extra ahead. So if you want to do 11,500, you can. If you wanted to just say, for example, short at this point, you know, shorting, you're looking for a target of say 9.8, and say your top loss, you can have it at like 5,000 if you so wish to, 5%, sorry, which is literally 11,700, which is like where structure broke pretty much. Maybe a bit higher than that, so you can obviously fiddle with these numbers. 750, it'll tell you what the loss is. That'll be 6% with a 3x, obviously. So obviously that'll be a small market move, multiple by 3, and happy days. So there you go. That is a huge risk reward, obviously, if it happens. We're going to test that one. But all we're going to do is go sell short, and that will put a limit order in there. The limit order is now in for a short of that period, and it will obviously put it in there nice and easy for you. If this does activate, which it's looking likely it might, we'll see what happens if it does. If not, who knows. But for me, it is super, super simple in terms of how to use this. And again, it's just all in moderation of how you want to use it. There is, as I say, advanced stop loss features which make it massively important. So again, you cannot really go wrong. With all this, obviously stop losses are market execution at market price. You can have this on certain ones. If you go onto the stop loss here, it'll tell you here, I put it at market price. So it literally, as soon as the market hits that price, it'll just wipe you out completely. And that's what you want. In terms of this, in terms of talking about leverage and stuff like that, obviously, the higher the leverage that you use, the more you're going to lose, obviously. You've got to remember that peace sign where you got to think, well, how much am I actually going to lose in this trade? Doesn't matter what leverage you use, it's about the sum. Now, certain people go, oh, you lost, what, 60, 70%? Well, actually, I didn't, because I only risked a small amount. You know, it's all in moderation in terms of your, obviously, your equity. So we're going to cancel this order because it's not going to play ball, but you can see how it works. And again, if you wanted to like close out positions, you can obviously, you know, use this. Say, for example, if you're in a position here, you know, and you're isolated, you can close out a part of your position as well. Very, very easy to do. Simple. So in terms of like a trade little mantra, or so to speak, a little bit of education about trading, it is totally different to the world of investing. You need to figure out what works for you and get it fitted around your lifestyle. I use the higher time frames. I use weekly levels. I use the Fibonacci levels on those weekly points as well, in confluence with a daily time frame with Fibonacci is an underlying pin for that. The most obvious thing for me is trend analysis. Looking at this high, look at this lower low. Okay, boom, hello. We've got this obvious lower high, lower low, lower high, lower low, lower high. Oh, hello. We haven't. Trend has changed. Why? Well, you got to figure that out. This is obviously Chainlink, one of the newer assets that's going to go onto here. Trend analysis is indicating that we are going north right now. And this is how I trade. Obviously, different skill sets and whatnot into the 618 level, which, by the way, this zone is a sequence of the Fibonacci from the weekly level as a big confluence point. And it looks like we're going up to $13, maybe even higher up to $15, but minimum at least $12.45. That is how I trade. Okay, simple as that. Obviously, there's more to it than that. But if you are new to the world of trading and you want to learn, trend analysis is probably the easiest way of doing it in terms of knowing where the trend is going. If it's going upwards, happy days, you've got a good chance. Most people do this, they go into the 30-minute time frame, they're like, oh, look at this, it's like amazing, I could trade. And then the buyer, like at this point, and they're like shit themselves, and it melts, and then you're in like huge arrears because essentially you've got yourself into a bit of a pickle because you went too high on the leverage and ultimately you've killed yourself. you've got to look at the overall bigger picture, and that is why I look at the higher time frames. It's much more relaxing, it's more comfortable. Also, with the world of Bybit, you can also get paid for actually holding an asset as well due to the funding rates. So it's obviously very, very important you understand that. But the one method that I will give anyone, and I will tell anyone, is use an exponential moving average at least to understand where the trend is going. At least, you know, that is step number one. Obviously, you've got to put confluence between chart patterns, price action, obviously other indicators if you so wish to use it, volume. Most important thing as well is obviously confluence between other time frames. But in terms of that, you do not have to use this for leverage. You can, if you so wish to, if you're betting against the market, you can hedge against it if you so wish to with 1x. That means a separate pot away from your investment pot. If you win more crypto. If not, you know, one way you're going to win, one way you're not. Essentially, you're either going to go right one way, wrong the other, and ultimately your investment banks will grow or this will grow. So overall, the fundamentals of trading is simple. Keep it obvious. Keep it simple as well. But the most important thing that I want to suggest is a good system, a good place to trade with good risk management and good benefits of that will always make things a lot better too. When you look at this though as a potential setup, this is looking nice for a potential long into this region. Who knows from that point? That could be a longer term downtrend into there. It could be an actual rejection. We could actually go lower. Who knows? It's all about probability. So bit of a messed up video in terms of like trying to teach you certain things, but I would highly recommend looking at trend analysis. Fibonacci's are obviously very much key in terms of understanding where things could actually go to, react and bounce. But it's all about that risk management more than anything. The best traders in the world have the most solid risk management, and Bybit, as an educational kind of point of view, this world is incredible for the world of risk management, in my opinion.